I'm Gene Munster, Managing Partner at Deepwater Asset Management and Head of Portfolio Research, and this is Pressure Points. Topic is NVDA earnings. We're first going to do a setup, then we're going to talk about the pressure point and also talk about why isn't the stock up more given the strength in the results. So the setup, when they reported the April quarter and gave guidance for the July quarter that was 50% higher than expected, many investors thought that that was not sustainable. This was going to be a one-quarter positive phenomenon. When they reported July, results were 20% above those higher numbers, and they guided for the October quarter revenue to be up 28%. So 2 points do make a trend, and it is a level of strength in the business that I haven't witnessed in my 30 years of tech investing, that kind of upside 2 quarters in a row. What's ultimately driving this is a shift from CPUs to GPUs to enable AI applications. CPUs have been around for decades. They do one computation exceptionally well, very deep computations, where when it comes to AI, you need to do parallel, smaller, more simple calculations that work in tandem. GPUs are much better at doing that, and that's the opportunity that NVIDIA has been tapping into. A lot of their success here has been driven by what's happened with the hyperscalers. That's like AWS, Azure, Google Cloud. Also, some of the big tech companies like Google and Meta. And they even said that 15,000 startups are buying their chips. So when you put all of this together, there's just a secular shift going on in terms of how data centers and compute infrastructure is being built, and NVIDIA is the only game in town. The reason why NVIDIA is the only game in town is they also have a coding language, a developer language that goes around the chips. This is similar to what Apple has done around its iOS and having it enable hardware sales, and what Tesla's done around some of their vertical integration related to some of their software applications and selling vehicles. NVIDIA is doing the same thing, which is a defensible moat around it. So that's the setup, which gets us to the results, which we talked about, but ultimately the pressure point here is that shares are only up 3%. If you would have given me these results and said, what do you think the stock's going to be doing? I would have said it's up 15%. And I think one of the reasons why is that investors are thinking more about 2 years out, what ultimately is the growth rate. One piece is clear, is that this eye-popping increases in guidance is unlikely because analysts will quickly start to revise their models upwardly. So we're probably not going to see these big blowout numbers relative to guidance in the future, which gets to the pressure point again is what is NVIDIA's growth rate in calendar 2025? Right now, the street's at about 20%. That compares to about 50% in calendar 24 and 70% this year. So it's going 70, 50, 20. I think that in 2025, the growth rate will be higher than 20%. I think it's going to be comfortably higher than 20%, call it 30, 40, maybe even 50%. So I think that the next few years are in a good place. One of the reasons is that they have this pent-up demand. This is rare to see this. They talked about getting visibility into next year, which is unheard of for a tech company because they're seeing the orders that they cannot fulfill just for production reasons. And so I think that the business has enough momentum. The theme around the shift from CPU to GPU has enough momentum that ultimately pushes the growth rates in calendar 25 higher than what investors are thinking. So that's the pressure point. What's 2025 growth? I'll take the over on where investors are thinking because I think NVIDIA is in a great place. Separately, if I want to address why the stock up only 3%, as I mentioned, I thought it would be up a lot more. And I think one of the reasons is just that concept that the results were so good, this is the peak. And we saw this too many times with Apple, with the iPod and the iPhone. They would have these blowout quarters and there would be anticipation going into it, and then the stock would sell off. In this case, NVIDIA shares are up 15% over the past week. The NASDAQ's up 3%. So the sell-off that we're seeing with the broader market and the muted response with NVIDIA makes sense, just given what the stock has done more recently. And historically, we've seen investors take a step back a few weeks down the road and start to reassess and think about the strength of these fundamentals and the opportunity longer term, and start to regain some confidence. So I'd expect the stock to start to base here and trend higher. Not investment advice, but that's how I see the roadmap ahead. And that's a wrap on pressure points. Please follow me at Munster_Gene on Twitter or X, whichever you prefer to call it, and look forward to seeing you on Pressure Points next time around. Bye for now.